Do you have a mortgage coach shirt, Jeremy?
I don't.
Up, everybody, and it is party time. We are live on the Mortgage Coach channel every Tuesday now for over 12 years. We have one goal: to put on the single best sales meeting happening in the mortgage industry on this given day. That's always my goal when I do this. And coming out of, when I started doing this, it was coming out of the last meltdown. And one of the things I noticed is that there were not enough managers, not enough leaders having meetings, communicating with their team, training, discussing the brutal realities of the market. And guys, we got one of those markets. Rates have gone up rapidly. Market has shifted. Meetings have never been more important. Sales strategies have never been more important. And scripting has never been more important. So today we're going to do, really, this is part 3 with Jeremy Forcier. I want to put it in context before I bring Jeremy on stage, because one of the things I've been doing is getting really clear on what's a good sales meeting. And so I have made it a personal goal of mine to do a sales meeting with at least 2,000 loan officers every single week. And I just started last week, and I had well over 2,000 loan officers go through this Mortgage Coach sales meeting. I had 3 goals. One, what ideas and strategies within the Mortgage Coach community can create loans now? Like, we need loans now, not like a week from now, not strategically 2 months from now, spring home buying season. Like, what can you do to get loans now? Now, I do believe this is a market share game. What can you do that's going to help you gain market share? And what can you do to improve your competitive advantage? So those are like my 3 big picture goals. And here are the 4 strategies, guys. Number 1, improve conversion and win with rate shoppers. We're not going to cover that today. Number 2, recruit realtor relationships and increase referrals from current agents. We're not going to cover that today, although indirectly we may speak to that a little bit. Although I'd say listen to the last interview I did with Jeremy. He gave you some killer scripts with realtors. We spoke to strategy 2 a lot in the last call with Jeremy. Today is all about number 3, strategies and scripts to close more cash out refis and more loans from your database. Now, we'll indirectly cover number 4, but today is really about number 3. And so this is the strategy we're going to focus on. I do want to remind folks, we are a client for life company. That means we want every loan officer in the Mortgage Coach, Salesboomerang community to get every transaction a family ever does. Like, when you're meeting with a family, that's 1 win. How can you get 10 wins over the course of their life? That's what we're about. Most loan officers, this is what your database looks like. You really don't know who's what. Well, guys, this is what Rocket's mortgage database looks like. This is what every big online, big data lender looks like. And guys, to some extent, this is what Jeremy Forcier's database looks like. He knows when people are getting a credit alert. Now, a lot of loan officers know that. They're getting alerts from their company, but they're not making the calls. Or they're making the calls and they're not saying the right things. Or they're not being consistent. So today, one thing we're going to do is we're going to talk about what are the most common alerts that you can get from your existing database. And we're going to talk about how can you get those people on the phone and how can you get those people into loans. At Mortgage Coach and Salesboomerang, that's what we're committed to, the leading client for life platform, so that when you get an alert, it actually has a TCA created already. And we're getting smarter and smart about what that TCA looks like. We're probably going to focus a little more on cash out, move up. Obviously, it's not a rate and term refi time. So I want to remind folks, we've got a cash out analysis in the Mortgage Coach platform, something that every mortgage coach should be sharpening their skills on like, how can you show a family, hey, you've got some credit card debts, you've got maybe some home improvement goals, maybe you want to pay off your house faster, maybe you want to buy another house in 3 years. Mortgage Coach will help you guys do that more than ever. But let's go to the scripts call with Jeremy. And Jeremy, before I start hitting you with the first scripts, any comments or thoughts you have to how I opened it, sales meeting, think of yourself as a co-sales manager of this meeting. Anything you want to add?
No. That was fantastic. I mean, my gosh, you were on a good run rant there. So I couldn't agree more with everything you put on there. And the slide was, that visual slide is really, really telling of where is our gap in our connection with our client, right? And including me. Like I was looking at a lot of those different items that they had on there, like FHA, trigger, streamline refi, equity increase, credit score is better, life event. And I'm good at some of those some of the time. And I'm not great at those all of the time, which is awesome that we can utilize technology to keep us in the loop even more. And technology doesn't solve it because you still have to do the work. And I think that's what we're going to talk about today.
We are indeed. So let's start with just the mentality about calling your trigger leads. We'll get into all the different types, scripts, and the nuances for each one. But I'm sure that you manage a lot of loan officers, and some of them are doing the right things, and some of them aren't. So let's talk about the importance of trigger leads and your general approach to them, and then we'll get into specific words and scripts for each alert.
Yeah. So I'm an oversimplifier, as you know, and as many of you maybe that have seen me speak before, I'm a super oversimplifier. So the way that I think about alert leads, or quote unquote trigger leads, right, is I get an email and it says, someone requested a payoff request or whatever it may be. Whatever the alert is, I look at it as someone is throwing me a fastball, baseball analogy here, or metaphor. I don't know what an analogy or metaphor is, but I know it's one of those two. So someone's throwing me a fastball and I have to swing at it, because you can't hit the ball if you don't swing. So I think where I see the big mistake being made by most LOs is that they're just depressed when they get the trigger alert. They're like, oh, they're doing something without me. Oh, they didn't call me. Oh, they're listing their house maybe. Oh, they might be doing a refinance. And they say all of these things when all you have to do is pick up the phone and call them, shoot them an email, shoot them a text message. You don't have to be secretive about it. I love telling people, hey, I saw that you requested a payoff on your loan. What are you doing? What's going on in your life? I mean, it's so simple, but if someone's going to throw you a fastball right down the middle and you are standing at the plate with a baseball bat, you should swing the bat, try to hit the ball. So that's my general philosophy, and where I once again see the biggest mistakes being made on LOs, at least that I manage, and probably LOs everywhere else, is that they just get depressed rather than excited. Like I would rather be excited that I have a new opportunity I didn't know about, rather than, oh, they didn't think of me. Poor me. Eeyore, Snuffleupagus. Hey, bird, they're buying a house again. They didn't call me. You can't act like that. You have to be excited. And what is crazy is that I've converted, and I confirm this with the owner of our company, is that I'm 17% better on conversion of these trigger leads than anyone else in the company. 17% better. So that means that by simply calling, asking questions, etc., I am retaining for our company a client, right? Or at least I'm getting good information about what they're doing and creating a new opportunity, even if it's not right now.
Out of how many loan officers is that, Jeremy?
At our company?
Yeah.
Oh God, thousands. I don't know the exact number.
Like over 1,000, couple thousand. So
Yeah.
The point I wanted to make there, guys, Jeremy's not one of the top 1%. He's one of the top 1% at conversion. And we could go on. I mean, I've interviewed Jeremy a number of times, and it's science. Yeah, it's energy, it's attitude, but Jeremy is the art and the science of selling. He blends both of those things. He's using tech, and then he's being himself. So hopefully, first takeaway, guys, check your attitude. First of all, do you know how many trigger leads that you're getting on a daily or weekly or monthly basis? And what's your attitude? And then what's your bandwidth? Are you making sure that you make the calls? Anything else we want to prep on before we just do the first script?
No, I think that really lays like a really basic groundwork for it. And then we can get into all of the, what do you say when you do it? How do you follow up? Because the follow-up is a little bit different, because it's essentially a cold lead, which we just need to accept. Even though we think, oh my gosh, it's a relationship, I did something for them. If you get a trigger and no one talked to you, I view it as a cold lead, which is a little bit different follow-up on a warm lead, in my opinion. So it's a little bit different follow-up for me from a process standpoint as well.
Cool. Well, we'll get into that. Well, let's go with the credit alert. And I love this one because while Salesboomerang is the most comprehensive, most complete, most accurate, and high volume alert system, I think a lot of people have this. It's like, let's say, the most common alert. And I also did an interview 2 weeks ago, guys, It was how a loan officer won a big bank. They had applied at their big bank. He got the Salesboomerang powered credit alert. And then he showed how he basically took that smaller loan, made it a bigger loan, and how he created transformational value for the consumer. So I'm going to put a link down below to that. But let's start with credit inquiry. What do you do and how do you do it?
Cool. So step one, you have to make sure that you are receiving the inquiry. So make sure that you're getting them, right? Sometimes you need to ask your company if you have this software, et cetera, that you are being alerted, not just internal sales team is being alerted. Okay, that's really, really, really important for everyone to know, is that make sure that it is coming back to you. Now, once you receive the alert, it's super simple for me. I call, email, and text, and I do it in that order, right? So the call is basically saying that, hey, I wanted to check in with you. This is for just a basic credit inquiry alert. Wanted to check in with you, see what was going on, if you have anything new upcoming in your life, whether it's purchasing a new car, remodeling your house, doing a cash out refinance, consolidating some debt. I literally list, this is why it's different than my normal process. I would list anything that could be a credit inquiry alert. I'm like, anything, just list them all in your voicemail. Just want to check in with you, see if anything has changed, see if you have any new debt. Are you paying off any debt? Are you looking to consolidate stuff? Maybe you're buying a new car. We could look at different ways to finance that. Purchasing a new house. I mean, I will list everything in the voicemail and then follow up with an email that is just a recap of my voicemail. So the call would be like, hey, Dave, it's Jeremy Forcier from Cross Country Mortgage. I wanted to check in with you and see if anything has changed in your financial outlook, whether that's buying a new car, funding a college education, consolidating some debt, needs for cash out on a refinance, maybe a home equity line of credit, or maybe you're just looking to pay off your loan faster and reduce your term. I would love to review all these different options with you, get caught up and see what's changing in your life so I can help you plan appropriately. I'm going to send you a follow-up email with all of this information as well. Let me know when a good time to chat is. You can reach me at 415-717-7155. Take care. And then I will email, hey, just left you a voicemail. Wanted to connect with you and see if you had any. I just do the same thing in the email, and then I send it off. And then I text them, hey, what's up? It's Jeremy Forcier, Cross Country Mortgage. I just left you a voicemail and sent you an email. I would love to connect with you about all this information. So let me know when a good time to connect is. Okay. So by doing that 3-hit system, same day you get the alert, speed is critical, by the way. Okay. Because if you're getting alerts, that means they're doing something, bottom line, right? So you got to be fast. So this isn't something you go, oh, you know what? I'll get to that tomorrow or the next day. You want to hop on it right away. Okay. Now you don't have to spend a ton of time on it. If you just noticed, I went through the script. I could do that call, email, and text in like a minute and a half, right? It's not like a ton of time. I'm not going to waste a bunch of time worrying about it, but you want to do those 3 hits really, really, really quick. Now, what I've noticed tracking this is that 66% of people respond and book an appointment with me. 66. That is huge. Okay. 66% of people will respond and book an appointment with me. So I think that you have to be quick. I think that you have to state all these different things that it could possibly be that they're doing. And you have to follow up in 3 different ways all at once, because it creates urgency on their side as well. And the reality is, Dave, Todd, and D-Bird, is that sometimes people just forget about you, and that's okay. Right? That's just the truth. Sometimes people forget about you. Oftentimes what I've found when I get these alerts, people are in a bad position and they're either embarrassed or they're panicked. So they think they need to do something right away. They walk into the bank and they're like, oh, I really need to consolidate my debt. Oh, there's a flyer on the wall that says consolidate your debt, right? And they're just like in a panic. So it's usually way less about you and more of their exact emotional state and emotional situation. So if we are going to preach that we are like client for life, yeah, we're going to help you manage your debt and we're going to help you do all this stuff, we need to be fast to respond to that and make sure that they make a better decision with your advice rather than a panicked emotional decision where they're just applying for things that may not even help their situation.
Guys, there was so much gold in that, guys. So first of all, make sure you're getting these alerts Also, if you are a Sales Boomerang client, make sure that you have the optimized workflow. Every minute counts, and Jeremy is a nerd about how he's using text and email. We're not going to get into workflow now. We do have Pablo, who is a success specialist at Sales Boomerang. He's going to be sharing some links down below. Also, there are some Sales Boomerang scripts, and they've got scripts for text, scripts for phone calls. But they asked me to say, hey, start interviewing some of the best in the mortgage coach community, because the scripts they have were created from lots of loan officer feedback, coaches feedback. There's actually a behavioral science team that has gone through these. But we're going to interview Jeremy Forcier, and we're going to have not only, call it the best of the best science of selling scripts. Let's face it, how Jeremy's going to be doing this is going to be different than how Denise Donahue's doing it, different than Josh Metal, different than other top producers in the mortgage coach community. So I'm going to start doing interviews. And right now, guys, you're finding out how Jeremy does it. Todd, anything you want to ask or pull out of what's been said so far before we do the next script?
Well, I think the thing to pull out, you kind of nailed it, Dave, in the introduction when you said that people are getting these alerts and actually not taking action. And then Jeremy did a great job of his snuffleupagus impersonation, just that people have the wrong attitude about it. And I think that's where, Jeremy, you do such a great job. You're just so different than most people who are like, oh, you're like, awesome. Hey, this is a great opportunity for me to reach out. And I think that's really the biggest takeaway for all of you, is really comes back to attitude and taking action. And I think if you think about that and how you can implement that and be more speed to lead like Jeremy is, and don't overthink it, right? He's given us not only great scripts, he said it, they're kind of simplistic. I don't want to downsize that. I mean, they're not that.
No, they are. They're simplistic. Yes.
But they're just don't overthink it. Just do it. That's what I would say.
Yep.
Simple usually wins. D Bird, anything you want to pull out or ask Jeremy?
Well, it reminds me when you shared, I don't know which call that was, Dave, you said the biggest expense in your business is missed opportunity.
Mm-hmm.
And I know there's a lot of loan officers that I even help and work with that get these alerts and they just don't do anything with them. So what stuck out to me is when Jeremy said that 66% of the people respond to those alerts. I'm curious, and you may not know these numbers, Jeremy, how many of the transactions that you had just last year came from an alert? And had you not had the alert, what would have cost you?
It's a great question. So I don't have that specific data over that long of a time frame. I will tell you that alerts have gone through the roof in the last 3.5 months. Okay. Now, why is that? Well, I don't know. Interest rates are up 2%. Economy slowing down. People are selling their homes because they think it's a great time to sell. So there's a lot of reasons why my alerts are through the roof compared to the last year. Okay. I think that there's way more opportunity right now with these type of alerts. One thing I wanted to add too that just popped into my dome is that make sure that when you're calling, texting, and emailing these people, I want you to make sure you got this takeaway, because I didn't verbalize it, but I just tried to model it, is that what I'm showing them is that I'm interested in them. I'm not trying to be interesting. I'm not like, I have this great strategy, give me a call, because I don't know what their need is yet. Be interested in whatever it is they are going through or they are doing. Don't try to be interesting. Don't try to be that salesperson of like trying to be attractive. Like literally be interested in what they are doing. And I think that's why I get so many appointments from them, is that I am asking them quality questions and I'm genuinely interested in helping them out. So be interested in the reason why you got the trigger, not the fact that, they didn't call you first. I think that's extremely important.
So two things, guys. Want to make sure, one, you guys, you're hearing best practices from a guy who is 17% better than thousands of loan officers at the company he works with, where they can measure retention, and one of America's top loan officers whose team does over $200 million a year in production, and he coaches and leads a lot of loan officers. So I just want to make sure these are best practices, and these aren't like ideas. It's not like, hey, Dave Savage, Mr. Mortgage Coach, Sales Boomerang, has got an idea for you. No, like this is in the trenches, badass mortgage professional telling you, be interesting, make the calls. And then I know the data, and most loan officers lose more loan officers than they close. I just have that data. And now at Sales Boomerang, we actually have a lost loan report where we can like take your database and tell you what loans you lost and who you lost them to. So guys, almost everybody on this call, you're losing more loans than you are closing, and you can't do that in this market. Like this is a brutal market, and one of the top strategies is optimizing your database. So Jeremy, let's do the next script. And I don't know if you want to make it 1 or 2, but cash out refi alert or an equity alert, you know, where you know that someone's got some equity, someone has some debt, someone's got some problems to solve. How do you approach that conversation?
Sure. So I really approach almost all of them the same way, and I'm sorry that that's probably going to sound really boring, but I mean I approach all of these almost the same way. It's just when you get them on the phone is really what's different. For me, when I have like a home equity alert, I will call someone and I'll say, "Hey, Dave, it's Jeremy Forcier, Cross Country Mortgage. Hey, I had an equity alert today that shows that you have an additional $150,000 of equity in your house since you purchased the home. I would love to chat with you about what to do with it or what not to do with it to make sure that we're still on track with your long-term goals. When is a good time to connect?" People will book appointments with you just from saying that. It is not complicated. Okay, it's that simple. Hey, your house has gone up to X, you have 150,000. You're making them feel good, just so you know. They're like, holy crap, yeah, I got another $150,000. That's more than my annual salary. Like that's happened just by me paying my mortgage. Like, and you can say things like that, like, hey, think about it like this. You just got an annual 100% bonus, right? In equity in your house. Like that's incredible. Let's make sure we use that bonus money appropriately, right? Thinking like that is going to trigger people to, not, no pun intended, trigger people to talk to you and make the appointment so that you can have a discussion. Now, this doesn't mean that you're going to get a loan from it. It just means that you're going to be more connected to your borrower. And if they are going to do a loan, or if there is opportunity, you're going to be the first person they think of, and you're going to create that opportunity by simply staying connected with them.
Boom. Jeremy said it's gonna be the same, bro. That was pure magic. I hope everybody heard. I'm gonna show you what to do and what not to do. I mean, that guy's
That's really important. I know it's simple, but yeah, just because someone has 150 grand of equity absolutely does not mean they should do a cash out refi, right? Like that doesn't mean it's not like pass or fail. Hey, you got $200,000 of equity, you should take it all out. I remember that back in the day, by the way. It didn't work out for us. Okay, I used to do that all the time. Every time someone's equity would go up, I'd be like, you got to take it out and reinvest it, and then oh, right, didn't work out, right? Because I wasn't qualifying people correctly as to what their goals were, right? I was projecting what I thought everyone should do. And there's a big difference between educating and projecting what you think someone should do based on a theory, right? I'll give you a great example. Mr. Rainwater, okay, won't use first name, calls me, I don't know, every 6 months, literally. And guess what it's for every single 6 months?
Cash out refi.
Yep. Hey, just wanted to check in. Right? Like it's always wants to do a rate and term 15-year, and it always ends up turning into, well, I bought this RV, or I got the, every single time. And I love these clients, but I have to have a talk with them every 6 months. I'm like, hey man, this thing is not an ATM. I'm worried about the way that you're managing your equity, right? If you need to do something, I will always fulfill that need. Right? I would rather help you over anyone else if you're going to do something, but I don't know if it's the right thing for you to do right now. Right? You have a 1.9% RV loan. Have you talked to your CPA about depreciating that because you're self-employed? Right? Can you do that? I don't know the answers to this stuff. I would check in with them, follow up, figure it out. Let's circle back and then see, does it make sense to do something? That type of advice is what truly creates the client for life. And that's why he calls me every 6 months, right? To see, what should I do? Every 6 months, like clockwork, he'll call me. Hey, what do you think I should do? Is there opportunity for me? Should I look at doing cash out? I finally talked him out of the last time. I go, hey, can we stop doing 15-year fixed rate loans? Because you refinance every 18 months. It doesn't make any sense to keep doing a 15-year fixed rate loan. You don't have an interest rate issue. I know I went over the script before, but I say it all the time. John, you don't have an interest rate issue. You have a cash flow issue, right? And until we fix that issue, right, you're going to keep calling me all the time, right, about your equity. So that's an equity alert type of trigger that I will call and have those deeper conversations. And don't be afraid to challenge. Dave recommended a book to me a long time ago that I reference all the time. I believe it's The Challenger Sale. Okay, is the name of the book. Am I getting that right, Dave?
You got it right.
Yeah,
If anybody who fails that hasn't read it, you're not your best. Go read that book. You'll be the best.
So
Or
all
you're
the whole book is really just around the premise. The top people aren't the ones that are always like, oh, well, let me see what I can do. They're the ones that challenge the thought process of the other person on the other side. So if someone gets a trigger for equity increase, you call them and you say, hey, you have an increased equity. And they're like, hey, well, how much can I take out? The challenge was in the script was, hey, let's see what you should do or not do. That's the challenge. Maybe you shouldn't do anything. Maybe you don't do anything, right? Because it's not in line with your goals. It's extremely, extremely important to have that type of education, transparency, and make sure you're giving great advice to people.
Love it. So I'm going to just do a little tease on strategy 3 for my sales training, because when you get those equity alerts, there's, first of all, show up with curiosity, to be interested in them, find out what they want. Maybe it's do nothing, maybe it's cash out, and guys, maybe it's move up. So I just want to call out this script from Amber Kovark. It's a killer script. You notice that she's personalized it, she's localized it. There's a 5-minute version of this in our YouTube channel. And then if the client wants to look at, hey, how could I put my equity to work to moving up? Guys, make sure you're doing a move up analysis. And if you don't know how to do a move up analysis, now back when refis were hot, we were saying, hey, put in a refinance in column 1. Refis aren't hot. So I probably wouldn't even put in a refi. But what I would do is put in current loan, put in a move up with the lowest down payment possible. So that, like, hey, you qualify, you could move up with this low down payment. This person had $125,000 in equity. And so what she was able to show them that, hey, you could move up at 5% and your house payment would go up by $507. Or you can move up, sell your old home, take that 125, recast your payment, and actually get an extra bedroom in a better school district and actually have a lower monthly payment. Or you could take that money and invest it with a financial planner. I think she used 6% on this. And look at this, guys. She was able to take an equity alert and turn that into a move up. And of course, in today's market, guys, if you can get someone to say, you know what, it's time for me to move up, agents dig that. Agents want listings. And so a great strategy for that. Jeremy, any thoughts on the move up TCA or that strategy?
I think it's money. And to do the challenger sale here live too, I would challenge everyone to why not the move down strategy?
Yeah.
Like if there's move up strategy, which is a no brainer, and there's also right size strategy, right? So a lot of my database is aging. I find that I have way younger people more than ever. And I find that my database, like over the years of doing this, is a lot, they're reaching retirement age, right? And so I think it's really important to, once again, understand what are their needs. Like if they're 67 years old and they're retiring next year and they're thinking about, selling their house, what does their retirement funds look like? What if they were to sell their house at 1.1 million right now and they owe 300,000 and buy a $600,000 house, right? And take that additional 400 grand and put that into some type of annuity. And I'm not a financial planner. I'm not giving financial advice. I'm giving them ideas, right? And analyzing, like, where are they at? What would be best for them? And then show them in a TCA, like, hey, if you sold here at 1.1 and then you bought 600,000, right? Oh, that free and clear extra 400,000, right? To invest because you don't have a lot of retirement funds. Like, this is a way that you can fund your own retirement and still be a homeowner and have no payments. These are all the different types of conversations that you can have. The move up buyer analysis, I mean, Amber is spot on her analysis there. It's money. We do it all the time, right? We do it all the time. We do move up analysis constantly on a daily basis with people, showing them, here's what your purchase power is right now with the equity that you've gained, right? This is what it looks like if you were to sell your house. This is what it would look like if you kept your house. We do that a lot too, by the way, right? And the most of the time when I'm doing, this is what it looks like if you kept your house, it's to actually show them that they should sell their house, just so you know. That's really the reason why I personally do it in my market. Everyone's market is different. The numbers don't make sense 99% of the time in my market, in my opinion. To keep the house, buy another one with where equity is, trading equity is more valuable in my market than keeping something and being at a higher risk of affordability on a rental property. So we do that all the time. And guess who loves that the most, Todd, Deb, and Dave? Who likes the showing people that keeping their house is not a good thing?
Your realtor partners.
They
like that kind of thing.
love it. They love it. I referred one yesterday. It was fantastic, right? Jay Wilson, so great. By the way, off a trigger lead, I saw a payoff request come in. And I was like, oh my gosh. I had the same thing, by the way, the snuffle. You're allowed to be snuffleupagus for a minute, just so you know, and then you got to get over it really fast. So I was like, oh my gosh, she's been such a great client for so long. What is she doing? So I did the call, the email, the text. She got back to me right away, had an appointment, and said, oh yeah, I didn't know that the payoff request was going to happen. I was just trying to see what my net sheet was if I was to sell my house right now. Right. And I was like, oh, awesome. Well, why don't I just run the numbers for you and then we'll take a look at it. I go, what's going on? Well, I want to sell my house and I'm going to relocate to the Sacramento area, which is about an hour and a half away from me. Right. And she's like, I'm just going to downsize, et cetera, et cetera. I'm not in any rush. I could even lease in the meantime. But I just wanted to see like what that would do for me. And I turned that into great. Are you connected with Jennifer, who is the agent? Haven't reached out to her yet. Hey, I'm going to reconnect you guys, right? I think she's going to be the best person to tell you exactly what to do in this situation. And hey, by the way, I work with a lot of great agents in Sacramento too. Would you like an introduction to someone there that can really help you figure out what neighborhoods and where you want to be with no pressure? Yeah, I would love that. I got a twofer, 2 referrals, right? Out. And she was like, I'm not ready to start the process yet because I'm not buying yet. Conversation. Hey, listen, now is the right time to start the pre-approval process. You don't have to do anything. You don't have to buy right now, but let's make sure that the loan is going to work for what you want to do in advance. So by the off chance you do find something sooner rather than later, you can go ahead and purchase that house now and not have any stress. You know what she said? Great. Sounds good. I mean, 2 referrals, okay, 2 different agents, pre-approval in process from a trigger lead where LOs are going, oh, I can't believe this person didn't call me. Right? I mean, I'm telling you, you just have to pick up the phone, make the appointment, be interested in what they're doing, and you can uncover 3 opportunities, not just 1.
And guys, in case you didn't connect the dot, that what he just covered speaks to strategy too in my monthly sales meeting. I'm putting this together for any branch manager that wants to follow this platform where there's, hey, we're kicking off the month. Here's the sales meeting. I'll even help you do it. So if you've got a bit, now my goal is over 2,000 people a month go through this sales meeting. Maybe I can get Jeremy to join me and we'll do a little extra call where you guys could come to the mortgage coach community. We'll figure out maybe a Wednesday or Tuesday and we'll do the mortgage coach sales meeting. But my goal is that you branch managers will be doing this yourself. Like I'm teaching you how to do a mortgage coach sales meeting. I do want to call out the fact that we have this playlist called the Mortgage Coach Agent Advantage, where these top loan officers created videos for realtors. And really, this is just a template for you. Denise Donahue did a really good one. I think it kind of speaks to what Jeremy just said, where she's taking a strategy like this, and then she's doing a realtor meeting. You know, hey, realtors, look what I'm doing. Let me show you how I can help you close extra deals this month, this year. So Jeremy, I want to make sure we get through all these scripts. What do you do and say for a listing alert?
Listing alert. Hey, right. I love this one. So this is where you don't need to list like all the things that they could be doing. Okay. And this is one also where you don't want to call and say, hey, I'm just checking in, you know, how are you? And you're waiting for them to say they're going to sell their house. I love this one because this is what it sounds like. Dave, it's Jeremy Forcier, Cross Country Mortgage. How are you?
I'm doing great. How are you, buddy?
Dude, I saw you listed your house. What are you doing, man? That's the script. It's not complicated. Okay. So like when you get the listing, I tell them, hey, I saw you listed your house. I got an alert. What are you doing? I'd love to tell me about it. I'd love to help you with it. What are you doing? Are you relocating? Like, did you get a crazy offer, like off market? Like, what are you doing?
Your
And then
friend.
yes. And then you let them tell you what's going on. Like, so that's the easiest one, quite frankly, right? Is that you just say exactly what the alert is that you got. I see that you listed your house. I'd love to understand what you're doing. Can I help you qualify for a replacement property? You know, there's multiple opportunities here, by the way. Help you qualify for a replacement property. Are you moving out of the area? I can hook you up with a realtor in a different area. Another one is, hey, I would love to make sure that your loan, that your home closes smoothly. Would love to help pre-qualify all of the leads that come in from the house that you're listing, of the people that are going to buy your house. There are so many different opportunities from that alert in itself. Who are you working with on listing? Are you working with Jennifer? That's who. Oh, you're not. You're working with a different one. Hey, could you introduce me to Heather? That would be great. I'd love to connect with her on a strategy to help sell your home faster. Like, so just call out exactly what it is if you know exactly what it is, and you will get way better information rather than dancing around trying to manipulate your way into them telling you that they're moving.
So guys, I'm going to call that the Jeremy Forcier financial friend script. So
Yeah.
Alex, who's the CEO of Salesboomerang, who came up with the hashtag no borrower left behind, also is doing a whole line of shirts called Financial Friend. And he's got one called Financial Friend with Benefits.
Ooh, I like that one. I want that
I
one.
figured you might like that one, Jeremy. We'll make sure you get one of the first Financial Friend with Benefits.
Sweet.
But guys, that's what consumers want. They want local financial friends. And so when you're using big data, Salesboomerang, we have data scientists, we have behavioral scientists. We are finding out that people are going to do a loan before they know they're going to do a loan. Now, the listing lead, no, everybody knows they're going to do something. But a lot of the data that we have, a lot of the alerts we have, we're using data scientists. And then guys, you need to be the financial friend, the local person that just calls people up. Now, Jeremy, do you call, text, email on that one? Do you call? Do you, if you don't get them on the phone, you text them? What's your multi-channel rhythm?
So mine is always in sequence: call, email, which is the recap, then text. That's always the system for me. Call, email, then text. After I do that, and I do that personally. So let me give you another quick tip on this. If you have a team or you have assistants, this is not an assistant reach out, just so you know. I'm just telling you, not initially. This isn't an assistant reach out. In my opinion, could be wrong. Josh Meadow might get on here and say, hey man, my assistant just hammers them, and that might work too, okay? For me personally, when I get the trigger, it's me. Call, email, text, then I move it to a normal follow-up process where my assistant is following up, trying to book an appointment. Okay, so for me, it's me reach out first 3 times, all 90 seconds. Okay, then it goes into a normal follow-up. What does the normal follow-up look like, you might ask? The normal follow-up follows my normal new lead flow. Okay, so after I've reached out, then it's triggered into it. This is a new lead, gets added to my lead tracker form, and then I have an assistant that is calling and emailing every other day to set an appointment with me for 1 week. If they don't respond, then it's 1 time a week for a month, and if they don't respond, it's 1 time a month for a year. Okay, that's my normal follow-up process system. But first, you have to start that system with trigger leads is really important, because you're the one that they chose to do the loan with previously.
Got it. Hey, getting a lot of questions about Salesboomerang. It is an enterprise platform. You need to have at least 10,000 records to be a customer. But if you do have questions, it's salesboomerang.com. Pablo will put a link down below. And just want to remind you guys, this is the #1 alert platform in the mortgage space. We've got over 200 lenders. So not only are you getting all the alerts within your database, we're getting smarter at how to get those alerts. So it's the biggest platform. We've got data scientists, and these are some of the alerts you could get. So check out salesboomerang.com. All right. And Pablo, if you could make sure you put a link to that down below.
Hey,
So let's-
Pablo, I wanna bring up a question that I saw hover over that Pablo typed out, and he was like, "Hey man, LOs are worried about seeming like Big Brother, right? Get over it, you guys. We live in a Big Brother society. We have for like 20 years. Okay, there's literally a TV show called Big Brother. Okay, like, and that was like 15 years ago. So like no one's going to be uncomfortable with it. You have to be comfortable with it. Okay, no one's going to be uncomfortable with it. You have to be comfortable with it. Everyone knows how to use an iPhone or a Droid, right? Everyone knows that they get Instagram, ads based on what you talked about 15 minutes prior, right? Everyone knows that it's an accepted thing in today's society. So don't be afraid of how you're going to appear like creepy. I'll tell you what's creepy. Creepy is knowing that there's an event happening and you calling and beating around the bush. That's actually way creepier than just calling out like, hey, I see that this might be going on. What's happening? And you're a concerned advisor. Okay. If you take the mindset of concerned advisor, you won't have any pushback, right? You just won't have any pushback on it. So don't worry about like how you might appear or what people might think, because the reality is when we think like that, what we're trying to do is figure out ways to be more manipulative, and we need to be less manipulative, not more manipulative when we're trying to help people.
I just want to add to that, Jeremy, it's also perception. I mean, if you guys are telling your clients that you're going to be their lender for life, this is something that with proper framing and context, if you addressed it at the time of even pre-qual, that part of us being your lender for life, the real heavy lifting of our job actually starts the day after you close. We invest in high technology to alert us all throughout the process so that we can always, notify you when there's an opportunity. So when you explain the motive, it's not for a sale, it's so that we can take that heavy burden of how do you carry the largest debt that we just helped you create. This is how we help you manage it after the close.
100%.
We're going to reach out to you when you could possibly have credit improvement or when you have equity improvement. So go ahead and expect it, because that's the real reason why you hire us and why we invest in high technology tools, because we actually prove we are your lender for life.
So true. So I had the same conversation with a first-time home buyer that closed last week. Called them yesterday, congratulate them, etc. And I used an almost identical script as to what Deborah just shared. I literally was like, hey, Nicola, just so you know, this is the start of our relationship, not the end, right? I will be reaching out to you when I see opportunities. I have you on an interest rate alert already. It's what I told her, right? Because we all know what happened the last 3 weeks. I had to close her at like 1% higher in interest rate than I thought when we first got into contract, right? And it happened really, really, really fast. So I promised them that, hey, I have you on an interest rate reduction alert. Don't worry about watching it every day. Don't worry about it. We're going to manage it for you, and I will reach out. Of course, you can reach out to me. This is the script, right? Of course, you can reach out to me anytime you want in between then, but I got this. I'm monitoring it. When there is going to be a benefit to you where the cost makes sense, I will be the first one to reach out to you. If you have any questions in between then, please feel free to reach out to me. Simple. Just keep it super
love
simple.
that. And notice, guys, in the top left-hand corner, we've actually got a rate watch alert. So that's not just a blind promise. Part of the platform is that it will look for that rate alert. And that brings up the other one, credit improvement. What do you say when you reach out for credit improvement?
So I haven't ever reached out for credit improvement, right? So I'm going to go off script on script here, and we're going to make a script up right now. So I need to add this credit improvement thing to my repertoire. I got to ask my company like, hey, how do I do this? So if I got an alert for credit improvement, now question for context before I do this, is this that there's an opportunity for credit improvement, or is this their
assume
credit
their
improved.
credit went up. Yeah, their credit
Right.
improved by 50 points or
Awesome.
more, or whatever
So-
you want to.
So
100.
here would be my script, super simple. Hey, what's up, Dave? It's Jeremy Forcier, Cross Country Mortgage. Hey, I just got an alert that your credit has soared. It has moved up significantly, which is great. That means that whenever you purchase anything moving forward using credit, it's going to be cheaper for you, and that's fantastic. Let's hop on a call, make sure that we can keep the integrity of whatever you've done to stay on that track. So that way, next time you're looking to purchase or refinance, right, we can get you the best loan humanly possible. When's a good time to connect?
Boom. We're
Bam,
here to-
off the cuff. Let's go.
Let's go. Let's do another one off the cuff. I don't know if you have FHA MI removal alerts, but at Boomerang, we do. What would you say?
I need to boomerang myself is what my takeaway is here. So I don't have here's what I do. I have my own reports that I run. Okay. And I look for basically whatever the national increase was, right, in equity. And then I can run a report through my database, right, to see like where would that put people that I have in place. And I use some other stuff too. But here's what that script would look like, right? So it'd be like, hey, John, it's Jeremy Forcier, Cross Country Mortgage. I don't know if you know this, but we can reduce your mortgage payment by simply getting rid of your mortgage insurance. Okay, so we can get rid of the $465 a month that you're paying in mortgage insurance right now because of your equity increase. I would love to schedule a time to talk about it with you. It may or may not make sense depending on where interest rates are compared to what you have right now, but I think it's an opportunity we should take a look at and investigate further. Done.
Love it. I think we're getting all the gold. So another one, and remember, any managers that want to do an alert audit, you want us to take a look at, are you getting all the alerts you could be getting for your loan officers? Reach out to me, Dave at Mortgage Coach. I'll connect you with someone at Salesboomerang, as well as we put a link somewhere below for you to get that demo.
I want an alert audit.
Okay, we'll get you an alert on it.
This
we'll
is
turn you on.
killer.
What about risk and retention alerts? And those could be a lot of different things.
Yeah.
But if something came up where you were getting an alert based off of criteria for risk and retention, what would that sound like?
Yeah, sure. So risk and retention alerts, in my opinion, happen most of the time, from my experience, that is with the alerts that I have, is like an EPO type situation, so an early payoff situation. So whenever I get a credit inquiry alert, except something like that, and someone has financed within 6 months of me doing the loan, that is what I call the 911 ring the bell, right? Like that is one that I might follow up 3 times with the call, email, text in 3 days in a row, right? Because I don't want an EPO. Right? I don't want to have to pay back a commission. I don't want my company to have to pay back a commission based on maybe a market opportunity, something happened, etc. And this has happened to me frequently. This happened to me with Florence last year, at the end of last year, right? Bought a house before selling, sold their house way faster than they anticipated. They weren't going to put it on the market until spring, ended up selling it off market 1 month after we closed the loan. I get the alert, right? And I'm like, whoa, what are they doing? We closed like a $700,000 loan like a month ago, called them, had the conversation with them, told them the truth. Hey, here's the deal. If you can pay off the loan if you want, and that's fine. It's not a problem. You don't have any prepayment penalty. I'm going to be penalized and my company is going to be penalized, right? If you pay this off before March 30th. I don't remember what the date was, but it was this month, right? We're going to get penalized. So can we work something out? Have you thought about recasting your loan and keeping just a small balance on it, and then you can pay it off in the future if you'd like? And she said, well, what would that entail? I really appreciate you sharing that with me. We just really don't want to pay a lot of extra interest. No, I totally get it. So what if I show you that you can pay the balance down to $100,000, lower your payments, right, by $2,900 a month, and then you just keep it for 2 more months and then pay it off? That would be a huge benefit to me, and you don't have to do it, but I would appreciate it if we could look into it. She said, okay. Like, even if she said no, that's okay too. It's part of the business, but she said, okay. hey, okay, I really appreciate you explaining that all to me. I had no idea. They don't know. They go, I had no idea that you guys get penalized, right? So I think that that's the biggest opportunity alert is for EPOs when you get them very, very quickly and trying to retain that client. Because remember, retaining the client doesn't mean that they keep their loan forever. I believe in home ownership and free and clear home ownership, you know, if that's someone's goal and they can reach that. But you can still tell the truth. And people usually want to help you because you have helped them. So I think that that's really important to know.
So Jeremy, we are going into wrap up. You know, one of the things that Boomerang alerts can do, and again, your company may have it, but just doesn't have this feature turned on. For example, all the alerts we have, you know, every company doesn't have them all turned on, but one of the other benefits to a Boomerang alert is it starts the total cost analysis. It will actually create the TCA. So I would just love to know, you know, your process on when are you creating the TCA within the alert process, you know, so if you could just kind of walk us through your workflow of when you do it and how you do it.
Sure. So there are a lot of different ways to do this, and I think you can have tremendous success. I'm not saying that my way is the only way or the best way, but I will tell you why I do it and how I do it. Because I know there are a lot of people that will send out like a preemptive TCA, right? Like they'll create one before they talk to the borrower and it has options. I personally don't do that. Selfishly, I think just because of time and influence. Like I want to get them on the phone. I want to engage them. I want them to have an appointment with me so that I can really know what their options are. And once we have a conversation, I will show them either what makes sense, but I will still create one for them, even if it doesn't make sense after I talk to them. So I will still create a TCA and go, hey, I wouldn't do anything. Here's why, comparing it to their current loan, right? And I will send that to them. The reason I do that is to show that I, number one, always have their best interest. I'm being thoughtful. And number two is that I have the opportunity to ask for more referrals. Hey, do you have anyone in this same situation that may or may not make sense for them? By the way, how great is that? Do you have any homeowner friends they're in this situation where it may or may not make sense for them to do a cash out refi? I'd love to connect with two of them. That's everyone, just so you know. Everyone they know that owns a home. It either might make sense or it might not make sense. And I'm asking for both, right? So do you know anyone that has had a huge equity increase that it may make sense for them to take a look at this, or it may not? I would love to connect with them if you can hook me up with two of your friends that own homes.
Boom, pure gold, guys. So Todd, we are in the closing 5 minutes, and I want to make this the best sales meeting today in the mortgage business. I think we've almost delivered on that, but I think we have to give some taking action notes and how do we take this hour of content and ideas and put it into action in the street.
You know, what a valuable 54 minutes we've had so far. Thanks, Jeremy. I always know you crush it. I definitely want to call it out. If anyone's interested, we are going to be hosting a premium priced site visit with Jeremy. We did one pre-health situation. We're getting ready to do another one. Just email me, todd@winbynoon.com. Again, that's just todd@winbynoon.com. Be happy to put you on the list and get you information. It's just a great opportunity to have a full day with Jeremy and his team and see him in action with a really small group of like-minded folks. I think the real key is, you just said it, Dave, we got to take action, right? I mean, I think that Jeremy, you always do such a great job of making it look easy. And it's because of the fact that you practice, that you've done this a lot and you're really comfortable with it. But I also think it's because of the fact that you said, I take action, and then you have to be interested and you have to be their concerned advisor. And so when Jeremy calls his client on an EPO alert, because he's built that rapport with them previously, then it's not disingenuous when he calls them. And so for all of you, what I would recommend, certainly number one, taking action, is to go ahead and watch this again. Write down the scripts, right? I've got them all written here in my planner. I've been writing away, and then just figure out how you can put these into your own process, right? Dave said the biggest expense in your business is missed opportunity, and I think that that's a tough one, right? Not any of us in this industry can look at 2020, 2021 and say that we got every opportunity that we should have gotten. And so that's really where this call and where Salesboomerang, adds this secret sauce for you to have the conversation. But even if you don't have it, you still have a database, right? You saw Dave's slides up front. You got the question marks at the top of the people who don't know anything, but you can figure things out. Jeremy says he's got some tools he's created to look with his clients, but in the end, you can just pick up the phone and call them and check in and see how they're doing, right? That's the whole idea of an annual mortgage review. And it's really what I love about this community. I love about folks like Jeremy who are willing to give their time, not just once, not just twice, third time we've had him on a call so far this year. And so I'm just really grateful, Jeremy, for you and your time, and Dave for you and your leadership. And then that Deborah and I get to be here and be the comedic relief. That's always awesome.
Yeah. Well, hey, one thing that just I thought about while Jeremy was delivering this, and I just put a link to a little 5-minute excerpt from a call I did with Jeremy many years ago, and it was called Jeremy's Selfish Why. And I bring that up because he's got a non-selfish why.
Yeah.
I want to make sure good people get great advice.
Yep.
And it shows up in how he shows up because he's driven by that value. I want to make sure everybody gets advice. I want to give a family a total cost analysis, whether it makes sense or it doesn't make sense. And then, of course, if I recall, your selfish why is, you want to fly private.
Yeah. I want a plane.
Yeah, he wants a plane.
I'm a long ways away, just so everyone knows, like from being able to actually having one. But I got this this bug when years and years ago watching Wine Library TV. Gary Vee had his first thing was called Wine, and he used to always and he still talks about it. I'm sure I don't follow him quite as much, but where he wanted to buy the Jets, the New York Jets, like that's his like selfish why of like crushing it, right? And I was like, man, I need one of those. Man, I would love to just be able to get on a plane whenever I want and just be somewhere. And that motivates me sometimes when I don't want to do things, right? When I just don't want to pick up the phone, when I don't want to have that call, when I don't want to have that awkward conversation, is I just remind myself of the freedom that it can create if I do for myself as well. And so if you're not motivated by your trigger alerts and they're depressing to you, just remember you might make $5,000 if you call them. Like, I think maybe that will motivate you. If you're having a hard time with it, it's okay to have both, right? It's really okay to have both. So just take action on it. Whatever you have to do to motivate yourself to help someone else is okay.
Well, the other thing I think you got to throw in there is that, if they're getting a trigger lead and they're going somewhere else, if you're a true mortgage coach and you practice what you preach and you're a great advisor, don't you want them to have the best advice, your advice, versus letting them get taken advantage of by somebody else? I think that's the biggest thing in this community. We have a great community of great loan officers, probably you too, who are watching this. And it's just an opportunity for you to give back to your client to make sure that they are truly getting what they deserve, which is advice from you.
Listen, I'll give you another example. And I'm sorry, I know I just feel like I could talk for hours today. So yesterday, or not yesterday, we'll see what's today. So it was Thursday. Okay. Last week, we got a trigger lead for someone that's in contract right now. Right. I think that is called UDM trigger. I don't know what it means. Right. And they had a trigger lead of another mortgage company, right? Pulled their stuff. We're going to close in 13 days. Right. And it's been a complicated scenario. The borrowers are really nice, but they have a hard time understanding like why we can't just take the wife off, or why we can't take the husband off and just use the wife's income because her credit score is lower, but she doesn't have any credit. And whenever we run DU and LP, even though like the credit's better and they still qualify DTI wise, Fannie Mae and Freddie Mac it won't approve, right? Ineligible because of credit history with 3% down, right? And so we see this trigger. I get on the phone with them and they're like, yeah, well, we talked to, X person and he said that we could save $13,000, right, in fees because using the higher score, removing the person, but it won't work. So all I simply said was, hey, I totally understand. It's an emotional thing. It's a lot of money, but I'm telling you that this is the only way it's going to work. So here's what I would ask that other individual, right? Have they run the DU and LP, and can they get fully underwritten approved with the fees that they quoted you? And can they do that within 24 hours? So he called me back and said, hey, I really appreciate it. We're sticking with what we got. When we got down to brass tacks, they basically said that, hey, you have two options, right? You could either put another 60,000 down, which they don't have because that's what it takes to get approved eligible, right? Or we could just keep both of you guys on the loan and the fees are pretty close to the same as what you were being told before. You guys, just tell the truth. Don't be afraid to have the conversation. Make sure people understand. Sometimes people are going to look somewhere else because they're scared, and that's okay. Acknowledge the fear and help them solve the problem.
Love it. D Bird, any closing thoughts?
just like Todd said, take action. And a lot of people, sometimes we listen to these calls and they struggle with the action part. So if you need accountability or need help, don't forget to check out the Win by Noon operating system, which the new coaching session kicks off next week on Wednesday. So we'll put the link there. But if you need accountability with taking action, then check that out. Because again, that starts Wednesday.
Right on, guys. And make sure you check out the Modern Mortgage Summit. It's coming up on 5/25. Jeremy's going to be one of the speakers of that. You go to modernmortgagesummit.com, get signed up. Jeremy Forcier, thank you, brother. You're the
All
man.
right. I know that we're done, and I'm just going to leave you with the challenge. I know we're
great.
running over. So here's the challenge for y'all. Okay. 100 outbound calls in one day. 100 outbound calls in one day. I attempted it yesterday. I got to 74. Okay. 100 outbound calls in one day. And just call your past clients, call realtors, call pre-approval leads, and ask them that, hey, would you be interested in, I have some software that can track your equity increase, that can track your credit score increase, all the opportunities. Would you be interested in having this free monitoring service on your behalf? Guess what? Everyone's going to say, that sounds awesome. And then they said yes to Big Brother, and you don't have to feel like Big Brother, okay?
Hey, Jeremy, any chance you and I could do a mortgage coach sales meeting every week this month, or the coming month?
Yeah, absolutely. Let's set it
So
up.
guys, stay tuned. There will be a mortgage coach sales meeting every day for the month of April. And I'm doing this one to help anyone who wants to come and hear from Jeremy and I and Deborah, whoever else joins. But I'm doing it too, because if you're a branch manager or you're a regional leader and you're responsible for the success of your people, I want this to be a playbook for you. I want you to be able to get some content from this, get some inspiration from this, and do your weekly sales meeting. That is my challenge to every manager in the mortgage business. If you're not doing at least one 30-minute sales meeting a week for your team, there is an opportunity for you to do better. So
Awesome.
Take care, everybody.
Thanks, guys, for having me.
Over out.
You crushed it, Jeremy. Thanks all.
Love you guys. Bye.